The weekly template is at the basis of Stacey Burke's trading system. All of its elements can be located and explained along the weekly structure. You name it. It starts with closing range, opening range, front side, back side, 3 days of longs, first green day. Everything makes sense once you locate it in this structure. I'm a Stacey Burke style trader that enhanced his system with some of his own elements. And in this video, I will go through my understanding of the weekly template, how I think along the week, and how I identify setups and trades. So if you're interested in that, stay tuned. So what are the core Stacey Burke trading principles? We had this in one of my last videos. I reiterate here because it's the basis for everything. So the core logic is that price is always in a box. The question is, what is the box? But in a weekly template, it's clear. You're starting with the closing price, closing range, and looking at the previous week's range, and then you start off from there. So there's a clear logic what boxes you are looking at, and from there you follow bias along the week. Then are other time frame traders driving a move. So there you were following multi-timeframe. What are they doing? Are they breaking out? Are they failing? What is the intent of the larger time frame traders? What is their plan, and in which direction are they moving the market? Then who is trapped? So you really want to see, are they trapping traders on one side of the week especially, and then pulling away from that? That's one of his major core thinking elements. Then based on that, we discussed this in the 3 series, especially what is your setup based on these thinking, especially also on the day. You look at timing, levels, behavior of price. And of course, you need to sit on your hands. Don't trade every move. You really wait for everything to line up that you get successful trades. So that's more or less the overall logic. And now let's look at what the difficulties are that traders are facing trying to trade that. So the common issues are, as I just said, what is my box? So really identifying what is the logic, the high and lows to follow in a specific moment to identify bias and levels to trade from. Then are other time frame traders really driving, and in which direction? What's their plan? Then who is trapped? Who's really trapped? On what time frame? How to line this up? And when is it confirmed? And then, what is my setup? And there's a lot of confusion around these things. I mean, Stacey always says, keep it simple. Day 1, day 2, day 3. Just look at the large moves. Don't trade every move. You know, all his signals, first red day, first green day, 3 days of longs, day 0, inside day, and so on. It all makes sense, but it's not absolutely easy to follow, and the structure he gives you sometimes can be quite confusing. So how to really think about that, and what is my perspective on this whole structure and thinking process? First, what's really important, and I think that's one aspect that most traders don't really understand fully, and this is why many are struggling. The whole discussion around these signals, and especially around the weekly template, it's all around context. It's not science. It's not deterministic. So here a quote from Dalton from Markets and Profile that I really like. Read this in detail. The expert reasons contextually. So it's not the nobody thinks concretely. Is not that you have one element and then you think, okay, this happened. A leads always to B, you know, and you have a day 1 3-day cycle. Then day 2 always needs to pull away from that. Day 3 always reverses. No, that's not true. You're building, as here Steenbarger says, you're building a web of possibilities. You're just aware of all these elements. Charts do not predict price. I mean, if you have some signals here, that doesn't mean that a trade is higher, is more probable afterwards. I mean, Stacey always kind of suggests that you have 90-10 situations. Maybe if you wait until the very last moment and behavior of price confirms, then this might be true sometimes, but only in the very last moment. Before that, you have no idea what's happening. And the major goal of analyzing all of that is the distribution of liquidity. So you're looking at risk reward. So you're looking at liquidity distribution in the chart and asymmetrical risk reward. And then if everything confirms, you might have nice trades. So you need to stay flexible. You don't try to be right and force anything. You don't overweight the latest piece of information and also no other one piece of information. It's all only puzzle pieces. We are very good at spotting patterns. Focus on the full picture and don't zoom in too much. So that's very important. Always be open, look at all the elements and build scenarios in your mind. And then you will see it's much easier because you don't force anything. You don't try to understand everything. You build a web of possibilities. You nail down the elements. And sometimes it doesn't make sense, so you just leave it. And sometimes it's like you flip in the last puzzle piece of a 50-piece puzzle, and then it makes sense immediately. You take the trade, write it home, and you're done. So read that, be fully aware of it. It's not science, it's not deterministic. So what is the weekly template? So this looks pretty complex. In the end, it really isn't. It's all of Stacey's elements on one page. That's the logic. And it's a mixture of many different trading elements and systems. You have George Douglas Taylor with his 3-day cycle. You have Steve Mauro with his beat the market maker logic. You have Tony Crable with opening range breakouts, range expansions. It's all there. So I will lead you through that and explain it to you, and I promise you it all makes sense. And after that, maybe you have to watch it a couple of times. You will have a structure in your mind that you just apply every day, looking at the market, and then you have a logic to follow through. So let's look at it. It's all about a wave kind of structure. So we're always looking at false breaks, low and high of week. That's the day 1 3-day cycle, like here at the beginning of the week. And then we have 3 levels of rise potentially into the end of the week. And then we potentially look at a reversal back down. That's the major structure, the main logic. It doesn't always have to be like this. There's different scenarios and also different templates, but that's kind of the core logic I'm also following, and all my elements, my signals are aligned with that. Also TrendPredator, the indicator, flashes the signals, especially along this cycle, and helps you to identify the different situations. So let's now walk through the single days one by one and discuss how we think about that and what could be potential high probability trades in the specific situation. So the last week closes. That's where everything starts. You have the closing range of the week. You have a high and a low. You have a weekly high and a low that's locked in. And you have a standing trend, let's say. You can see, are you in a downtrend or in an uptrend? You have the weekly, monthly range, the previous ones. And then you can, with my multi-timeframe logic, you can already identify what's the bias. Are you in a weekly breakdown, for example, in a monthly fake out highs, or are you potentially here in a downtrend? Then you look at especially at the closing range, and that's it. So over the weekend, you can do your analysis, look at all of that. nail it down, write it down, however you want to document that. And with this, you start off the week. Then on Monday, you're watching what price does in relation, especially to the closing range. So here in this case, we had a fake out low of closing range at previous week's low. So you're pretty careful on Monday always, because Monday, if you think about it, the larger traders, they are typically investing and planning in waves. It can be days, it can be weeks, it can be months. We are focusing here on the week, because the week for me is the major time frame to look at. So typically they come in on Monday with a new plan for the week. Maybe they have a plan for the month also. Let's not think about that for the moment, to keep it simple. So on Monday, let's say they are flat still, because they typically close out their positions end of the week. Some don't, but let's think about it like this for the moment. And then they come to the screen on Monday with a plan and build their logic along the week. What are they doing? As you know, market makers, they can't just buy or sell and then wait what's happening. They are really driving the market. So they have a plan, and they need to build something in the chart and along the week. And especially on Monday, as you know, we don't have a lot of liquidity in the market. I will explain you what that means. So the money comes to the table, and new money, new plan on Monday means that all the structures on the chart are not as relevant as end of the week. So you don't have a lot of information. So you need to be careful, and you don't kind of trade or only a bit related to the last day. So sometimes you have setups hanging over from the last week, but typically you're just careful and wait what they're doing on Monday. And then you will see, I mean, we will discuss this on the next page. Don't counter-trend a Monday runner, because they might expand the range and they're building the logic. So they are building a thesis for the week, and they're trying to trap people on the one or the other side of the chart to use their liquidity to make money. So they might, for example, just fake out the low, triggering shorts, and then pull back up again. So they have the liquidity triggered at the low, and then they drive the market into the other direction. So George Douglas Taylor explains that with the 3-day cycle. So you have a day 1 3-day cycle at the low of the current week, and then you're pulling away from this. This is the first element. So you have a day 1 here. Day 2 would then be Tuesday. It's confirmed as soon as it breaks out here. So you want to hit a level on the other side. And then you have a day 3 on Wednesday. Then on Wednesday, George Douglas Taylor says you can either have a large continuation trade or a reversal trade. So day 3s, day 1, day 2, day 3 is just a signal to identify potentially large moves on day 3. For most people, just make this too complex. I mean, you really just look at a peak formation at the extreme of the week, and then you typically wait for price to trade away from it. So it's pretty important to also keep in mind that as long as you are within the previous week range, it's also one of Stacey's major rules. Once you have a day 1 3-day cycle at the low of the week and you didn't hit the other side of the week, you typically only look for longs. So you wouldn't really hunt a reversal trade mid-week, mid-range. That just doesn't make sense. It might turn out to be a reversal trade, but this really needs to confirm on the lower time frames. So that's a 3-day cycle. The next element to look at is the opening range. So the opening range is Monday's high and low. Tony Crable talks about that a lot. And the opening range gives you already a lot of information for the week. So is the opening range narrow? then you already have a coil into the week, and very often you get range expansion moves, parabolic blow-offs through the whole week. If the opening range very wide, then you very often get a ranging week. So sometimes the whole week stays within the opening range. So the size of the opening range is pretty interesting. And then based on how the week evolves, you also have Stacey's other day counts. So you always look at day 1, day 2, day 3 on the front side of the week, building liquidity into the week. There you have the first major potential parabolic trade in his view. So day 1, day 2, day 3. Day 3 template on Wednesday. Then day 1, day 2, day 3 into Friday, next large trade. I don't really look at that much. For me, it's more the week builds up until Wednesday, and from Wednesday on, I look for larger trades. That's how I think about it. Then you have the breakout count. So you have 3 breakout longs or shorts, what he is looking at. So maybe day 1 breakout, day 2 breakout, day 3 breakout, and then potentially after even a first red day, then you look end week for large reversal trades. Also liquidity in the market, backside of the week, look for larger moves, and then the breakouts along the week with the liquidity build up, a lot of short liquidity, stop liquidity then at the lows, and then this will be taken out potentially end week, and then the whole week is flat again. That's something you see quite often. Also, who explains this a lot is Steve Mauro. I like this a lot. Steve Mauro always looks at 3 levels, and this is a tool of market makers to induce traders into the wrong direction to then move away from them again. So induce shorts, then trap the shorts and push to the long breakout, so triggering longs, and then he explains the market makers step back and let the market do the next day. So kind of this, they trigger and build this reversal, then the market goes long, pulls away from it and pulls the market maker money, market maker positions into the money, so they make their money here. Then from there, it's again slows down a bit. Then the market makers push it up one more time into level 3, inducing even more longs, but only to trigger them. Sometimes it's very volatile at the top of these level 3. They're triggering this maybe with the 3 pushes to get even more longs into the market. And then they turn it around and do the same thing as they did on the lower side. They pull them underwater, pull them down, maybe stop them out, and use the liquidity to push in the other direction. They pull it actively underwater, pull the market away, and then they step back again and wait for the whole thing to play out and wait for the market to push in the other direction and making them money again. That's the market maker cycle. They always trigger the participants in the wrong direction, then they pull them underwater, and then they wait for the market to react to make them money, and then they do the whole thing in the other direction. This is only on a flat ground. I mean, you always also have this in trends, but this is typically how this works. Hitting stops on both sides, going to the next level, hitting stops on both sides, next level, then turning the whole thing around. That's how this works. Then let's look how multi-timeframe helps you looking at that. So as we discussed, weekly breakdown, weekly fake out high, monthly fake out high potentially. So the higher time frame bias is already coming with you into the week, and then you're following especially the daily bias. So here you have a daily breakdown, you would be careful. Then once it pulls up, you have a daily fake out low, which is bullish, not still very bullish because the day before might have been in breakdown yet. So you wait until it breaks out. Then you have a daily fake out low, daily breakout. Then you see the trend is turning around. Another daily breakout, strong trend. But then you come into midweek. Both directions can happen. Then you get another daily breakout, 3 days of longs, overextension, so you're careful. Then you might get a weekly fake out high once it pulls back in again here. Daily fake out high with 3 days of longs, potentially first red day. Then you would look for a larger reversal trade end of the week. What's also important is you always look, as I indicate here, the template on the day. So here, if you are want to take a long trade, you want to have a dump and pump template. The same here, dump and pump. Then midweek, you really have to see, do you get a pump and dump, maybe a midweek reversal, or is it dump and pump and into the next level? Also then here, if you look for reversals, you want to have pump and dump templates. Pump and dump templates into the closing range of the week. So that's more or less how I think along the whole week. Front side, back side, liquidity building up, and once you have at the back side of the week the whole structure, you see the liquidity levels, and then you can plan for the larger trades, high of week to low of week, and hit the trades we are all looking for. So that's in a nutshell the whole system, and now we are going a bit deeper, bring structure to that, and look at a couple of variations. So here now one of the first pages I ever wrote. This is, I think, more than 2 years ago when I started to build my own playbook, and it's still one of the most important pages I've ever done. And I'm thinking about this more or less every day and relate to it for most of my trades. So this really kind of guides you through each of the days, and for me also it's extremely important, and I have this in my daily affirmations. For every day I come to the screen and looking for trades, I'm reflecting on the day. What day is it? Is it Monday or is it Friday? It's a completely different situation, and you look for completely different things. What's the news schedule along the week? What's the days and what happened so far? So really step back and think about the context, and then plan your trades for the day accordingly. Is it a nail and bail day? Is it an ain't coming back day, end of the week? Is it do you have non-farm payrolls on Friday and potentially expecting a 4 or 5 day template? You know, there's a lot of different things that you need to be aware of. But let's go through the single days and what their specific characteristic is for you to look for, and how to trade those specific days. So Monday, as we discussed, fresh start over the template. It sets the opening range of the week. It's often a low volatility day. You are especially looking at if it's trapping Friday's traders. So you're looking at the closing range and see if we are already pulling away from the Friday's closing range, and maybe we had a failed breakout on Friday and they are already on Monday have the opportunity to pull those traders underwater and make money with that straight away. So really think about what the market makers might do with this week. What is their opportunities? They have to make money, and it's not just buying something. They have to drive it. They have to trap someone and use the liquidity. If you're inside previous week range, very important, follow the trend. So you're not looking for reversals beginning of the week, especially not once you're not already at the extremes of the previous week or month. So only if you are hitting previous month or week high or low, then you are expecting larger moves. You always look, as I said, at the closing range of the week. Are we in breakout or fake out? And this already gives an initial bias for the week. Then, very important, as I already said on the last page, is the opening range as it closes, is it narrow or is it wide? This gives also a lot of information for the rest of the week. If it's narrow, you typically get nice parabolic moves along the whole week. I will show you some examples of that going forward. Then, especially the rule for Mondays is do not counter trend a day one runner. What that does mean? That means new fresh money in the market, and they are building new liquidity. They are driving moves and building, a story for the week. They are not typically reversing already, because there is nothing to reverse to. There is no liquidity in the market yet, so they have to build it first. So you're not counter trending anything, so you're rather looking for range expansions. Wait for it to break out on one side. You look, is there someone trapped already from the last week? Is there some setups hanging over? And then you're typically following these moves and wait for it to run in one direction. So do not counter trend. That's very important. Then Tuesday. Tuesday establishes the initial balance. In 80% of cases, as Stacey says, one side will hold. It's nice information. It doesn't help you much. It's a day 2 template. What does that mean? That means it's front side. So you don't expect large parabolic explosive moves. The market searches for direction. Especially be careful on Tuesdays when it's inside. It's lots of volatility. You can easily be trapped. That's the most important day to be very careful and trade from the outside. So really wait for it to show you a fake out high, fake out low. Look for reversal trades, high of day, low of day, or breakout. Look for trend trade, range expansion. So the typical trade on a day 2 on Tuesday is the range expansion trade. So if you look at reversals, I typically wait pretty long for the reversal. So if you have a reversal in London, maybe you take the continuation in New York. Or if in New York reverses, I wait very late into the session and rather go with the low-hanging fruit, because the risk that they just expand the range is very high. So better look for breakouts, retracement, continuation trades. That's the typical trade on Tuesday, especially if the opening range was not too wide. Then you typically can look at an opening range expansion, and you can mark, the range expansions, how many, or how many levels of rise, and what's the average true range of the pair, and you see how much space it typically shows. Then Wednesday, midpoint of the week, day 3 template. Naturally. So that's the first opportunity for weekly cycle parabolics. Look for 3 days, 3 sessions setups, 33 trade. That's the first opportunity coming from Friday. So Monday breaking out, Tuesday breaking out, Wednesday breaking out, reversal. So that's your first opportunity. Look for 3 peaks up after hitting a level, potentially 3 days of rise, 3 pushes into a level, maybe for a long or short squeeze. News often on Wednesday, so be aware of that, of course. Look at break in structure during a week so far. So maybe you're coming out of a downtrend and Tuesday already did a higher high on the inside, or the other way around. That can be interesting. I'm not looking at that much, especially not if it did a fake out high, then I'm careful, but it's something to be aware of. And then especially on Wednesdays, be careful. Wednesday parabolics often blow off in the direction of the trend. So it's not that you always have a reversal on Wednesday. Be careful. Look at multi-timeframe and be open if it's a trend trade or a reversal trade. That's especially important on a Wednesday. Then we come into Thursday. Thursday is also a day 2 template. So it's often also not too parabolic, so it can also be again a day that searches for direction. It depends on the template, especially after a reset, so if Wednesday resets, then you have a Thursday day 2 template, which you have to be careful. Sometimes if the template built into Wednesday, and also as we now look at the 5-star setup, maybe even closed in breakout, then you might have a very strong parabolic day on Thursday. So there is a lot of different variations that you need to be aware of. News calendar is especially important. So if you have non-farm payroll on Friday, for example, be very careful on Thursday, because they typically just build up another day for large moves on Friday. Look for 3-day setups. For example, Tuesday, day 1, 3-day cycle, 3 days of breakouts, and so on. So you are at the backside of the week, can get very large moves. You have a lot of money in the market already now, so liquidity is built up. So you can really look for high of week, low of week, low of week, high of week trades. And also, if you trade news, I don't do this much anymore, but the second half of the week, first bounce trades are typically much better, and you get much more follow through, because Of course, there's a lot of liquidity potentially on the other side of the weekly range. Then Friday is our major parabolic day, Thursday and Friday, of course, but Friday is again a day 3 template, often major news day. Then you have to be careful and wait for news, of course. Be aware of the overall weekly cycle. So how could the week close? Look at it. You know, what could they be up to? What's the template? Do you waiting for a blow off? Is it a range week and nothing happens? Could it be just another leg up? So really look at different scenarios. Look really for the large setup, high of week, low of week, 3 weeks of rise. So also zoom out a bit and look at the weekly and the monthly template, especially on Friday. You often see that there the setups that were built up over a long time unload and go to the other side of the range and take all the liquidity. Look for 3-day setups, of course. Wednesday, day 1. Where are the coils? Very important, especially also with Stacey's new ACB logic. Closing breakout maybe on Thursday, and then a coil into the New York session on Friday. That could be interesting. Really look for coiling markets and the parabolic moves that come out of that. Stay open. You also have, of course, the possibility of reversals and blow off. And often Friday closes with a runner into the end of the session. That would be the end coming back. Not always, be careful, but sometimes the templates really give it. Traders are trapped, liquidity is on the other side, and it just runs into the close. And if you scale into those trades, this can be more profitable than the rest of the trading for the whole week. So Friday, really look at 3 and 5 star, and especially look for the liquidity distribution in the chart, because often Friday just takes out all the liquidity that was built up during the week, and the market makers close their positions often on Friday. This can mean that it's giving a pullback at the end, but it also can mean that they are just ending the plan for the week and close it out as all the liquidity is taken out. Thinking about Stacey's signal days, how to think about them and how to trade them along the week. This is my weekly navigator, how I call it, related to his typical signal days. So as we discussed, Monday, Tuesday, be very careful, because their liquidity is building up. You don't have a lot of structure in the market, and you need to be very careful trading at all, because market makers coming in, expanding the range, building their new thesis. But sometimes it hangs over from the week before. So here I say risky, avoid. So if you don't have very clear signals, I wouldn't trade on Monday at all. But if you have, for example, all these signals aligning, first red day, first green day, 3 days of longs, at a day 3-day cycle, potentially hanging over from the week before, it might give nice trades on a Monday. So as an expert, you can take some of those, but you need to be very, very selective. Tuesday, a bit of the same logic, still expanding the range, but a bit more of information. You have the opening range, so you have some information to relate to. And then if you have, again, these signals aligning, you might already take a potential trade, as I say. Then on Wednesday, that's your first real key trading sweet spot, and you're kind of looking for all of those signals. Thursday, as we discussed, again, day 2 template, be a bit more careful. But if they are aligning, especially if you get 3 pushes out of opening range or a 5-star template, then it might be really good. And Friday, of course, again, good. So this is kind of a logic to keep in mind. It's not very complex. It's a pretty simple thing, but always keep in mind liquidity building up until Wednesday, liquidity unloading into Friday. So much more information and much better situations on the backside of the week, especially if this signal days are aligning, and also if the multi-time frame is aligning with the signal days. And this is something we will look at now, how multi-time frame again helps you to trade along the week with the weekly template. So multi-timeframe. So how does multi-timeframe work? To just recap that for a moment, and how does this tie into the weekly template then? As most of you know, I look at especially the three things that markets do. Price is always in a box, and then we look at what does it do to the box. Previous day, for example, here in the weekly template, especially high and low. The next day, what does it do? Does it stay inside? That's neutral, or takes the bias from before, or it breaks out. Once it breaks out, that's bullish. So in a daily breakout, if it breaks out, you immediately trigger liquidity into the market. So typically these breakout traders have their stop losses on the other side of the range. Not all of them, but most of them put it there. So you build liquidity on the other side of the week and day once it breaks out and triggers other time frame traders. Then you are following what are they doing. If it's pulling away, many of them move their stop loss to break even at the breakout level. So there is also liquidity. So you have liquidity at the breakout level and at the previous day low level. And also there is liquidity in the range expansion. That's something I look at also pretty closely. For example, if this is the opening range, you look at one full expansion of the opening range. This is a typical take profit level for many. And that's why you get often reaction there. You could also say that there is liquidity because there is a reaction. So that's the kind of the three major locations where price builds up liquidity. And if you follow this along the week with every new day and breakouts, I had a time where I was really marking that on the level. It's really eye-opening where the liquidity pools are on the chart, and then you see often how they just move the market to these liquidity pools and take them out again one by one until the end of the week. You also can play with it, for example, with the stop loss. If it breaks out again, typically they move their stop loss to the next closer low of the day. So you can play with these liquidity pools also in a dynamic way, and this is really helpful. So if we broke out, this is a bullish bias. So we are typically looking for continuation. If it's coming back in, as you know, we are bearish. This liquidity is pulled underwater, and if they pull away from it, they might be stopped out, either already there or down here. So then you are in a bearish bias and following the market rather in the bearish direction. So let's look at that in a sequence and multi-timeframe perspective. So the elements to look at is breakouts show how the other time frame traders are driving. So we're looking at this on the daily, but we're also looking at it, of course, on the weekly and on the monthly. So are we in a monthly breakout, potentially a weekly breakout? Then we look at the daily. So we look at the alignment of these different bias situations. The TrendPredator Indicator, my own, you see the link in the description box, helps you with that. You will also see that in the trade examples and the chart examples we are using later, and then you can follow that. And then we are looking at fake outs. They show the traps. So breakouts show how other time frame traders are driving, and then if we potentially get overextended situation along the week, 3 days of longs, it fakes out potentially a previous day high and pulls them back down. Then you might get a daily fake out high, potentially a weekly fake out high, and then a reversal rollover. That's how I think about it with multi-time frame, and especially the strong setups show alignment of these multi-time frame signals. We will look at that in a moment, especially with the different weekly template scenarios, and you will see this helps you a lot to follow that elements along the week. So the basic patterns. Markets are fractal, as we all know, and you've seen this also in my 3 series videos. I always look at 3 major scenarios for everything. This is for a session, this is for a day. it's for a week, it's for a month, you always have the same situation. So you need to find out, are you in a reversal situation? So a trend that's ending and rolling over, so you can have a reversal week, or is it a parabolic week? So building liquidity on both sides, coiling, and then exploding and going into a range expansion, or is it a continuation move? So you're already coming out of a larger time frame move, and the week, the day, or whatever, in this case the week, just continues the larger time frame trend and goes on into one direction and might even blow off into end of the week. So this is three major scenarios, three major templates I'm looking at. Of course there are more, but these are the major ones I am looking at myself, and I will show you now with specific patterns. So the first one, the reversal week. This is the one we already have been looking at, so I won't go into that too deeply anymore. Quickly go to the examples, but still, so what is for a reversal week, what's the typical pattern and what are we looking at? So if you want to have a reversal week, you want to have a trend that's following on. So you have potentially here a downtrend, then you get a pullback into the downtrend, and then you trade the reversal back into the downtrend. That's the logic. So you're following that. So potentially you are hitting the previous week low here. I mean, for a reversal, it's even better if you don't. But potentially you get a day 1 3-day cycle as we've seen before, and then after first green day you get potentially multiple breakouts against the trend. So you potentially scalping longs here against the higher time frame trend because the lower time frame is bullish for the moment. But then once you hit the previous week high and you get a fake out high here potentially with the first red day, on a Thursday, potentially 3 levels of rise. Then here another day 1 3-day cycle, maybe an inside day, coiling into end of the week. Then you either have here a parabolic blow off or maybe another fake out high. That's then an even clearer signal. 3 days of longs, daily fake out high, weekly fake out high. You have the monthly breakdown. Then you would have your end week reversal rolling over, and you fade the level 3 here according to Mauro and have a major reversal short end of the week with a pump and dump template, ending the week with a large move down. And as you see here, often it then takes out a daily level. So if you have the breakout traders and you follow their liquidity, they will pull their liquidity stops. Their breakout stops after this breakout. They typically have it here or there. So often you see then this large move taking out this liquidity, taking out this liquidity, and then kind of drives into end of the week, and then there's no liquidity left along the week. So that's the overall logic of the reversal week. So let's look at some examples of that now to be more specific. So here now an example of a reversal template. It's 22nd of February last year gold. I specifically looked for an example of a downtrend, reversal into downtrend. That's not that easy the last time for gold, but last year February it was the case. Let's look at it. Here, daily chart. You see here 2 indicators, 2 of my indicators on the chart. One is TrendPredator. It shows you the bias here on the daily time frame. It shows you the bias for day, week, and month. So is it fake out low, breakdown, or breakout, and so on. And here on the context, you already can read the interpretation of that. Here you see the breakdown levels. So previous week low is here, previous week high up here, previous month low is here. So we last week broke down and closed here in a breakdown. So we have a bearish situation. This is Friday, closing range of the week, bearish chart. Let's see what's happening from there. The candles are colored by my fake out highlighter indicator. It highlights fake outs as the name suggests. Here the red candles are fake outs high, so broke out and closed back in. This was a broke down, closed back up. Here also broke down, closed back in, so it's slightly green. And there is some other states, I will show you those, especially the switch candles are pretty interesting, where it breaks a previous breakout bar to the other side, which then shows momentum shift on the current time frame you're on. So now Friday closing range. Let's look what's happening. Monday coming up. So here that was Friday, sorry. Friday closing range, Monday opening up, breaking out. So here you see immediately closing range did a fake out low already, and they pulled away from that. That was the scenario. Monday sometimes traps Friday's traders and immediately punishes them. That's what they did. They just pulled away from them, broke out of the closing range. So you have a bullish bias for the moment, and then the opening range closed up here. It reclaimed the weekly and the monthly level. So for the moment, this is a bullish chart. It was already a pretty large move here for a Monday, so potential reversal is more probable from there. And then you see already the next day did a fake out high. That's why it's red already, and also closed as a first red day. So you have a first red day, you have a weekly breakdown still here. So you see here the indicator already flashes potential reversal, first red day. The month is still in fake out low, but this is not far away. So let's see what's coming next. You see here already it dropped deeply. So this was already a first red day trade. I show you that, and it smashes into the opening range low, closing range high, and rejects. And then you have here peak formation high, peak formation low, still bearish chart overall. Now it's saying conflicting because this was a fake out low, but then you see the next day completely rolls over, loses the monthly breakdown level also, and this is a kind of a day zero situation, and then it is a reversal continuation here, and it completely loses it to the downside. It breaks this closed breakout bar. That's why it's a switch candle. So this is a very bearish chart then from here, downtrend. So a reversal on Wednesday, a reversal continuation on Thursday, and then from this even a stronger continuation into Friday. So you see here downtrend, pullback, 3 candles back up, 1 breakout close, first red day, and then it rolls over and goes all the way into the end of the week. So this is a very nice reversal template. Let's look at it one time frame lower. So now the same situation on the 1 hour time frame, and then you can see it a bit better. So here the blue ones are the days. You see this is Friday, this is the new week starting, so this closing range of the week, fake out low, so potentially some shorts already trapped. Starting into the week, TrendPredator flashing everything bearish for the moment, but at the Monday morning you don't do anything, of course. You just wait what's happening and watch first. So now it's breaking out. So already saying downtrend, pullback. So downtrend, a pullback because the day is breaking out. So you're pushing back up. Nothing to do here. I wouldn't trade this long, of course, because you are trading against the higher time frame trend. And also TrendPredator, here you see no setup at all because it's just a pullback against the higher time frame trend. So you're waiting what's happening, then it pushes up, breaks into through these levels, but this is then already late into the session, so there is also no trade anymore, of course, and also to long up high here would be not very relevant. So this is then your opening range of the week, as we said, pretty large. This is the closing range. At the moment, all time frames bullish. Coming into the next day, Tuesday, what does it do? It fakes out the high here. You see, coming up, switch candle, losing the high. Then immediately the day goes into fake out high, 3 days of long also. And you see here, reversal situation, fake out high, continuation high of day, counter trend for the moment because the week is still in fake out low, but it's 3-star already because the 8 hour is also in 3 longs. So here it's already flashes you that a reversal situation might come up. But this is more or less going sideways, still consolidating here. It's a Tuesday. Tuesday you are very careful also. Day 2 template. Only trade from the outside. This would have been an Asia short. I wouldn't do it. So here you are inside completely of the opening range. So you wouldn't take any trades here. And then you see it closes as a first red day, as we already seen. And you then come into the Wednesday. And you still have bearish overall situation here because you're losing the weekly level. The month is still bullish, but then we see what does it do. Here you see it loses here coming into New York session. It loses the weekly breakdown level, and here you have your first red day trade down to the opening range low into closing range high. So that's already a pretty large Wednesday reversal move, making this a day 1 3-day cycle, this a day 2 3-day cycle, coming into the backside of the week. Then backside of the week, let's see, it's pulling back up a bit. So here lower low on the inside, coming back into the trend, then it's pulling up again. That's very nice to see. And then you see here already it's working back into these levels. Here switch candle, London entry, a potential one. Then here you come into the gap time, switch candle, a potential continuation entry, and then it loses it completely, and it is a complete parabolic day Thursday after this already signaled a switch of the momentum. This was a reversal continuation trade Thursday, closing as a breakdown close into the end of the day. And then the next day you also see the trend predator still flashes everything bullish, bearish, downtrend, breakdown continuation. It just blows off into end of the week, loses the weekly low, and then even goes into a range expansion into the end of the week. So this very nice reversal template with higher time frame bearish bias, and you see how the thought process with all these elements goes through the week and everything lines up. 1 day of breakout, 2 days of breakout, 3 days of breakout, first red day, rollover, trend continuation, backside of the week into end of the week. So that's a very nice example to be remembered. So next reversal situation, end of last year, December 6th here. Also a nice reversal situation. This is Friday closing range of the week, coming out of a consolidation week with a fake out low here. Otherwise the bias is rather mixed. The week is bearish, the month is bullish, but a first red month, so not much information here. So let's see what's happening from here. Monday, opening range, similar to the last situation. Fake out low here on Friday. Monday pulls away from them, breaks out, and even breaks out the weekly. So this switches immediately to an uptrend. First day of breakout, opening range of the week, bullish bias for now. Pretty clear. You see here week, 3 weeks of longs, and month, first red month. Also an inside week, interestingly. inside week breakout now. This was the inside week, so let's see what's going on from there. So you have an initial bullish bias for the next days. Tuesday, breaking out, doing a trend situation here, flashing healthy uptrend, especially out of an inside week. You expect a trend situation anyways. So this is pretty bullish for now. Nothing to counter trend, no shorts as far as you can see. The second day of breakout coming into the Wednesday in a bullish chart. What does Wednesday do? Another breakout. So you have one breakout, two breakouts, three breakouts, very bullish chart, breaking out again, initial balance breakout, hitting here a weekly level. So something to be cautious. Uptrend now overextended because we have 3 days of longs. Here you see the 3L. So very strong uptrend for the moment, but overextension and hitting a level. So this is something to be aware already coming into Wednesday. So we are aware that something could happen, and something happens. It does another peak to the low and rolls over, and this immediately flashes a potential reversal situation. You get your first red day here, fake out high out of a 3 days of longs, midweek reversal situation, now locking in the high of the week after 3 days of breakouts. And then you see Friday just does the continuation. It's a pump and dump template, and then closing out the week at the extremes. So very nice pump and dump reversal situation, absolutely textbook. Let's look at this one time frame lower. So now one time frame lower, 1 hour time frame, same situation. Here you see previous week was an inside week, so the indicator also flashing context consolidating. It's bullish still because we are coming out of a fake out low. The week is still bearish overall. Month is bullish, so you're just coming sideways into the week and are looking what is happening. And you see here again, after the fake out low, as we just discussed, it breaks out to the top, closing range breakout, and then the opening range expands pretty strongly to the upside. This flashes immediately uptrend. Inside week breakout, let's see what it does. Closing here, so that's your opening range, closing range, your in breakout, weekly breakout, everything bullish for now. Nothing else relevant. Yeah, we have the 3 weeks of longs, we already discussed that. Then you get another breakout here, second breakout on a Tuesday, day 2 range expansion, closing at the extremes. So you could take a trend trade here, day 2 from the outside. That's possible. Here you even see you get a very nice fake out low continuation candle into New York. So that was potentially a pretty nice trend trade here. And then you're coming into Wednesday. And Wednesday already here does the third breakout, but trading further up and closing at the extreme. So here you have then 3 days of breakout longs into a Wednesday, but Wednesday never really gave you a short entry here. Also closing at the extremes, closing in breakout at a Wednesday. So it's also an ACB template. It's probably 3 closes in breakout anyways here, though pretty nice. And then you see coming into Thursday, now at the extreme of the week, hitting this weekly level, you immediately get a fake out high beginning of the day in Asia, and then the indicator already flashes a potential reversal, fake out high, continuation high of day. It's counter trend, but it's all very overextended, so it's pretty clear that this could be the high locked in already. And then From there, it pushes a bit further up into New York. Here you get your switch candle, you see that, and then there's nothing holds it anymore, and it just collapses the whole Thursday down. So this would be the Thursday backside of the week fake out high rollover. This is then your first red day. Coming into end of the week, you had this was your switch candle also. So this is a pretty bearish overall situation. And if you see what Friday then does, it just continues further on. It also loses here the weekly level, everything bearish, and it closes out the week. If you look at the liquidity situation, that's always interesting. You see this breakout typically triggers the stops down here. Once it breaks out here again, the stops get here. Maybe this moves some of the stops there and some stay still here. So you see front side builds up, liquidity is on the other side of the week, then it comes down, this hits already, this stops here, pulls a bit back up, a pump and dump template, Friday continuation until it hits the liquidity below the Tuesday, and then at end of the week all the liquidity is gone again. Market makers are happy, they made exactly their play, pulled everyone into longs, trapped them at the top, trapped them, pulled them back down, and then the market carried their position into the end of the week, taking the liquidity on the other side, everything taken out, week closed, market maker happy. So that's also a classic reversal situation, and let's now go on to other examples. Now let's look at parabolic week. What is a parabolic week? Parabolic week is one that goes more or less sideways beginning of the week and then blows up off into end of the week. So how could this build up? Friday maybe in a bearish overall situation, previous week high here, so we are in a weekly breakdown, closing range of the week, no, weekly fake out high the previous week, but then coming into the week, the previous week high could be here. Closing range here. Now we do a fake out low, dump and pump template. Day 1 3-day cycle as this pulls back up. Opening range breakout, hitting previous week's high. Here printing a day 1 3-day cycle. Potentially Monday was a narrow open range here compared to typical daily ranges. Then here you get a short scalp potentially at the high of the week as it hits this level, but it's of course a Tuesday scalp, which I typically wouldn't take. But then you come into the Wednesday, you see you have then a peak formation low, peak formation high, going sideways further. Maybe Wednesday is even an inside day, so it's coiling clearly sideways. This could give even a first red day. You have a fresh weekly fake out high here, so everything bearish. This is a day 1 3-day cycle, then day 2 3-day cycle, first red day. And then potentially backside of the week, Thursday, day 3 3-day cycle, you get maybe a parabolic channel into Thursday, and then Thursday blows off completely to the bottom with one full expansion of the weekly range as it stands. You see this very often, so this could be a very nice trade. Then the next day starts off inside, potentially pulls back, rolls over on the day with a 3 sessions of rise or something. And then one of my favorite trades, breakdown continuation trades, all time frames bearish, back to the low of the day, previous day low potentially. Then closing out the week with a closing range here, potentially at the extreme. So let's look at some specific examples of this. So parabolic week example. This is NASDAQ 14th of February, so just not long ago. Let's look at the situation. We are in a healthy uptrend, potentially. So week in breakout, month in breakout, day in breakout after 3 days of longs, closing in breakout. The week and the day closes in breakout. So this is your closing range. So for the moment, pretty bullish. But as we know, close in breakout, maybe something to watch. So let's see what it does. It starts off the week, and you already see here breakout of the previous week's high and a very narrow opening range. So closing range, breakout, but here almost nothing happens. So this is very suspicious and very interesting. So you are already interested because you have a very narrow opening range that hints to a parabolic week. So let's see what's happening then. Next day going sideways, an outside day, also going nowhere, consolidating at the high. Next day, another one, an inside day, coiling here on top of everything into Wednesday. So we are very interested in that. Then what happens the next day? Okay, you get a first red day. So it loses this weekly fake out high. You had a peak formation high here, or it was an outside day, inside day. So this everything hints to a parabolic. You losing the weekly level here, closing back inside with the first red day. Then you get finally interested, and then you see the next day this is Friday, just does another little pull back up. Let's make this one more time. Here, you get another pump and dump. This is a daily fake out high, retesting this weekly level, and then it just loses it and blows off parabolically to the bottom into the close. So this was a huge move. This is a classic parabolic weak situation. Narrow coil at the beginning, closing range, and you see even the Thursday stays inside the closing range, losing it, and then it just does a range expansion out of this weekly range, probably two range expansions, and then closing at the extreme. So let's look at this one level deeper. So same play again with the 1 hour time frame. This is Friday, closing at the extreme in breakout, and you see here uptrend overextended, but a breakout trend situation, all time frames bullish, but close in breakout of week and also day. Then we see what's going to happen. So this is our closing range, high and low, and this will be the opening range. So trading in breakout, so they closed here. You see very narrow opening range, still 3 days of longs, also 3 weeks of longs, by the way, I see here. So TrendPredator says uptrend extended, but still bullish overall since we are trading above the previous week's high. So then it takes the high one more time, faking out the high, coming down. Now we have a pretty mixed situation here, so you need to be careful. I wouldn't take any trades here on the Tuesday. You see Tuesday then there's a day zero. Interesting. At the moment we are again bullish because we are trading up here, but this is now our initial balance for the week, and we are still trading inside, pretty narrow. So you want to trade this from the outside typically. So wait for what's happening. Next day closes as a first red day. So this first red day, after these close in breakouts, this makes you interested. Wednesday, losing the weekly fake out level, and an inside day. So you want to trade this again from the outside, and you're looking for range expansions. And then what's happening here, it retests this into New York session. A second hour trade would be pretty aggressive, but normally, you know me, I would rather wait then for the real trade. So this was the blow off to the bottom, the Thursday trade, making a lower low on the inside. Then it comes up, does another fake out high of the day here into New York session again, and then this is your real weekly continuation trade into the end of the week. You see here previous breakdown, continuation, low hanging fruit. From there on, TrendPredator flashing in a 2-star setup. It's not more because it's a low hanging fruit. They are all 2-star, but this is an overall a very textbook parabolic week. Inside a very narrow opening range, outside day, inside day, first red day, lower low on the inside, another fake out high, and then rolling over and blowing up, blowing down with a probably one full expansion of the weekly range until there. If you do it like this, yeah, something like that. So that's a typical parabolic week. Let's look at some more examples. So last example, trend week. So let's see, how does a trend week show itself? So we want to have a higher time frame bullish bias. So a weekly breakout, for example, monthly breakout or fake out low. What's favorable for a trend week is an inside week, for example. We see this often. So as we know, inside bars typically expand the range or they reverse aggressively, but if you are coming out of an inside week and break out of those, we very often see trending patterns. Then coming into the closing range, we potentially have a daily fake out low, 3 days of shorts could be, or a first green day. So any bullish signal helps in this respect. Then day starts off, potentially breaks out bullishly. It might be narrow also, similar to the parabolic week. So the parabolic week is a bit similar. The parabolic week typically moves sideways first. So in a parabolic week, you typically have a peak formation high, peak formation low, and then blow off. A trend week just goes in one direction and never looks back. Trend week also often comes after a strong downturn. So it can be the reversal kind of came in the week before. Maybe it's even a first green week after 3 weeks of shorts or so, and then maybe a close-in breakout on the weekly, and then this week just goes in one direction. So there's a couple of stories that lead to this week, but within the week you typically then just see one direction. So day one runner breakout into the week, opening range, potentially still narrow, as I said. Dump and pump template might also be a parabolic day. Then out of this opening range, potentially another breakout. It might break out of the previous week high. You see this often. So then you have like 3 days of longs. Then you might have on Wednesday a parabolic blow off already into the long direction. Potentially close in breakout, could be breakout of initial balance. You have 3 days of longs. And this is a pattern where you always need to be careful. 3 days of longs can be a signal for overextension and for reversal, but it also means it's a day three. And day threes, also day three longs, they can also blow off to the top. It's for the moment, it's just a strong trend. And if you don't get a break in structure, if you don't get a daily fake out high, maybe in combination with the weekly fake out high. So if you see here the previous week's high, and this is a weekly breakout, and even if you get a fake out high here, this you see very often, then you have here a narrow range between the daily breakout level and the weekly breakout level, and often it just ranges here, coils, and then does another leg up. So as long as you are not overextended after the weekly breakout, and on the daily, be very careful with any reversals. That's the classic situation. Especially the weekly level is pretty important. Either you have enough space back to the weekly level, so the weekly breakout level, or you lose it. Otherwise you don't short it. So then here this might become a reset. So I'm not really looking at 3-day cycles reset much, but if you have a day that traps shorts again, so if you have a dump and pump template and if you have a very nice peak formation low here, then it's a reset. That means that it traps shorts one more time, and then from there you could count further on. But as you see, it's not really relevant. I mean, I have it on here because this chart is from quite some time ago where I used it more. The 3-day cycle is not that important. It's just important that you identify the peak formations in the week. So a peak formation also is tracked by my multi-timeframe approach. To just have a daily fake out level, fake out low, fake out high, and then pulling away from it. This is in the end all you need. If you like, you can track a bit day 3s to see if they give larger moves. My backtesting showed me for myself that this didn't really help me much, so I ditched it. So I really look more on multi-timeframe alignment. That's much more important for me than day 3s. But this might be different for different pairs, trading styles. I don't know. Just for me, I didn't really keep that in my system. Then after this day, you might get, for example, an inside day. I mean, there's many variations, of course. You might even get a first red day here in breakout. That's the classic first red day fail. A strong parabolic move, then you get a first red day. People trying to short that, and exactly this short tendency helps to fuel the next leg up. So this could then be, if this is a reset, but that's not important. This would be day 2, this day 3, inside day. After an inside day, you have always a day 3. So also showing that you don't even track it, because an inside day you always trade the same. After an inside day, you expect a parabolic move, either a fake out reversal or a trend. Here, potential scenario. Another daily fake out low inside day, and then an end week parabolic blow off to the top, closing out the closing range of the week. So this is a scenario for a trend week. As I said, put many possible variations. Always build the story day by day. You see the different elements to build the story. It's always a bit different. There's no week is the same. And it's only context, so you don't really force anything of that. You just watch it, you observe it, you note it, and then on the day you still trade the 3 session setups and the intra-session setup. And if this aligns nicely with your context and gives a thesis that aligns, then you looking for larger trades. That's the story. So this is only for identifying trades to hold longer and to see the quality of the trade. You don't force anything that you see on this time frame. This is just context, just story. So let's look at a trending week example. So now, trend example. We are gold chart 17th of January, so not long ago. You have a week close in breakout. Here you see TrendPredator saying all time frames bullish. Week is in 3 longs. Month is an inside week. Trend situation. Context uptrend overextended for the moment. Then from here, let's see, this is the closing range of the week in weekly breakout, monthly level up here. So let's see how the week starts. The week starts off with a fake out low. So they are not pulling away because there is no trap traders on Friday. Friday was an inside day even. Then they trap freshly to the bottom to then pull away. So that's also one nice start into a trend week, one scenario. And you see this is then opening range, relatively narrow. This was an inside day, fake out low, and then we get a range expansion to the upside, opening range expansion, initial balance, closes here in breakout for the day. and we are also then in a weekly and monthly breakouts. You see here healthy uptrend. So this is then pretty bullish until here. Let's see how it goes on. Wednesday does another leg up, so an initial balance breakout, pretty bullish. Then Thursday does a reset, so there you get a fake out low, closing back inside. So you could argue that it's always the discussion, is this a lower low on the inside, or is it a fake out low continuing up? You only can judge that looking at the multi-time frame. So if we have a fake out low here, I'm only looking for shorts after it does another fake out high afterwards, or if we are losing the fake out low level again and it rolls over. So for the moment this is bullish, and you don't look for any shorts. Only maybe on the day, if you have like 3 sessions of rise or so, it's different, but on the higher time frame this is just bullish for now. And then you see next leg up Friday just pushes into the end of the week and does another leg up. So this is a very nice trend week, kicking off with a fake out low and then just going long and closing into the extreme. So let's look at this on 1 time frame lower. So 1 hour time frame. So we are here closing out the week as we discussed. You see healthy uptrend, 3-star trend situation, all time frames bullish, just on the not the lower for the moment. Week closing out. So let's see how the week starts off. It does a fake out low first already, as we already seen, right in Asia. So a very quick fake out low, trapping some shorts here and then pulling away immediately. So reversal from the low for the moment, bullishly back into the bullish situation. Then here closes the opening range of the week at the high. The Tuesday breaks out immediately from the day, and also then works in London through the monthly and weekly level, breaking out here. So you have your opening range expansion here. You see TrendPredator now switching everything bullish, uptrend, breakout continuation trades. So here you're following the trend into Wednesday. Wednesday does another close in breakout. So here again pretty bullish for now, and it's flashing bullish still. Then the Thursday does another dump and pump template. So this is your reset. This is can be seen nicely on the 1 hour time frame especially. And then from there, after the fake out low, you are bullish again, and into Friday it just breaks out in Asia and works all day into the close of the week. So this is a typical trend week. There's even stronger ones out there, but that's what you're looking for. Overall bullish chart, maybe a narrow start into the week, or here you had a closing range that was an inside week. That's also a signal for that inside week, inside day fake out low continuation, and then it just trends on. Typically you have a pause day in between, here a fake out low that's even clearer. Then it can also be an inside day, and then it just closes into the extreme, and that's a typical example of a trending week. So takeaways. What did we discuss now in cinematic length? It's clear that weekly template frames the week. So this is a logic that you follow through every day of the week, and it gives you a very mechanical almost process to understand what's happening. It's a lot of different building blocks that extend every day. You get more information and kind of try to find out what the story of the week is. There is liquidity building up at the beginning of the week. There is not much information, liquidity and story there. And then each day you get more information. There's more liquidity on the chart, and until the end of the week into the backside, it potentially unloads and takes out all the liquidity of the chart. And this is the large moves we're looking for. It's all about manipulations. So really think about what is the story, what is the rationale and the plan of the market makers. What do they want you to believe? How are they building up the week? How does this fit to the news schedule? Often they build it up into the news, and then news is the catalyst, and from the news impulse you get your move, and this then follows through into end of the week. Very important, last point, as I mentioned before, charts do not predict price. This is what many don't really fully understand. You just look for risk-reward situation, liquidity distribution in the chart. It's not so important how you count all these days, and it's not that if you have a day 3 or if you identify the day 1 3-day cycle, then you're fine. No, this is all information that builds up for your context, and then afterwards you define your thesis and identify your setup. And this setup you place then into the context, and you see if this makes sense. So you don't force anything, and this doesn't lead to direct setups. The setups always build up on the lower time frames. As you know, I trade bottom up. You have to look at the day, you have to look at the session, and only if you get a setup on the session and on the day, then you place it into the context, and then you understand, is this a 5-star, is it a 3-star, or is it just a 1-star scalp? So that's the logic. So I hope you liked it. If you like this thinking around trading, feel free to join my Discord. Just follow the link here. You get to my WAP. On the WAP, you can directly go to the Discord. You also find all these links in the description box. Also, TrendPredator, you can have a free trial. You see TrendPredator, the different versions, they help you really to read the context, to read the trend along the week, also then on the day for the setups and so on. We discuss this type of things in my Discord community every day. There's a free document for you, if you like, where you can see a lot of these elements on paper. And you also have a large collection of videos on my YouTube channel where you can find more of that. So if you like, subscribe to the channel, like the video. I hope this was helpful. Thanks for listening and have a nice day.